Here we are going to discuss about audit and assurance chapter number 3. Okay, so we are going to start with chapter number 3 of audit and assurance, okay, which is AA syllabus. Okay, so here before we move to chapter number 3, we left certain portion of chapter number 2. So let us try to complete that first. Okay, so in chapter number 2 so far, what we have discussed is we have discussed about the regulatory environments, we have discussed about the external audits, we have discussed about reasons and mechanisms for the regulations of audits, we have discussed about the provisions related to appointment, rights, removal and resignation of auditors, we have discussed about rights and duties of auditors, we have discussed about limitations of external audit, we have discussed about development and status of ISAs, we have discussed about the relationship between ISAs and national standards, we have discussed about some portion of quality management also. But before we move further, I would like to ask you here, do you have any questions so far? Do you have any questions so far? Yes, do you have any questions so far? Do you have any questions so far? If you have any questions, please feel free to let me know. Yes. Okay, so I can see that there are many people on the live chat box. So very good evening to all of you. Welcome to this session. Welcome to this session. I can see Swapna is here. I can see Swastika is here. Very good evening to all of you. Okay. Okay. Now, in today's session, what all things we are going to cover? Let us first have a little clarity on that. Okay. What all things we are going to cover in next 2 to 2.5 hours. Okay. Number 1, we are going to cover chapter number 2, the remaining portion. Okay, it is very less. It is very less. We are going to cover what? We are going to cover chapter 2 remaining portion. Okay. Then we are going to go towards chapter number 3. In chapter number 3, we are going to cover all the core concepts. Okay. We are only going to remove or exclude 1 or 2 objectives from our discussion for today, because that will make our discussion little cumbersome, little technical, and what I would suggest is that we cover the remaining portion of chapter number 3 in our next class. Okay, then we will solve certain questions from chapter 2. We will solve certain questions from chapter 2. Okay, that is something that we are going to do today, and then we will move towards the basics of chapter number 4. So we are going to try to cover all of this today. Okay, I hope the agenda is clear. I hope the agenda is clear. Yes, I hope the agenda is clear. Okay, now let's quickly go and start with a discussion over here. Okay. Okay. Yes. Okay, so let's go to a fresh discussion for today. So that day we have completed up to here. Okay, now we are going to cover each one of these objectives in detail. So we have covered this slide as the last one that day, and today we are going to start with the detailed discussion on engagement resources, engagement performance. Then we are going to go for the review part, then we are going to go for the engagement quality review, and then we are going to discuss about the quality management procedures, and that is how we are going to cover this chapter number 2. Okay. But just to have a quick understanding of what we have covered so far, so we were discussing about ISA 220. We were discussing about ISA 220, and there we said that there are certain components of quality management, and those components are spelled as HEALME. H standard for human resources, or in our technical language we call it as engagement resources. Then E standard for engagement performance. Then A, acceptance and continuance. Then L, leadership. Then M, monitoring, and again E standard for ethical requirements. That is how we covered it up, right? So let me write it again over here. So we started by saying that the components could be spelled as HEALME. Okay, where H stands for human resources or engagement resources. E stands for engagement performance. A stands for acceptance and continuance of relationship, client relationship. L stands for leadership. Then M stands for monitoring, and again E stands for ethical requirements. Will we solve chapter number 3 questions today as well? Not today. We will definitely be solving chapter number 3 questions also, but not today, because today we will not be fully completing chapter number 3. We will leave 1 or 2 objectives. So we will be solving chapter number 3 and 4 questions on Monday. Okay, after we complete everything. So on Monday our objective or our agenda is going to complete chapter number 3 and 4 in full by covering all the portions, and then we will be moving towards the question solving of chapter number 3 and 4. Okay, now see, now whatever we have to study, this is part of what we have already discussed. For example, in engagement resources, what we have already discussed is that we should use the resources that are assigned or that are available to the engagement team appropriately. When I say appropriately, what do I mean? I mean that we should use all the resources that are available to us to the best of our capabilities in the most optimized way, right? That is very, very important for us. So now let's have a quick understanding of this concept in a little more detailed manner. Okay, this is nothing but this is the detailed version of what we have already studied so far. Okay, so when I say engagement resources, the appropriate capabilities and competence expected, the appropriate capabilities and competence expected of the engagement team as a whole include the following. That is, what do we expect from our engagement team? What is the level of capability? What is the level of competence of that engagement team? So an understanding of what we should expect. Do we need to remember this word by word? Definitely not. You just need a understanding of it so that you can face the questions regarding it. Okay, so an understanding of and practical experience with audit engagements of a similar nature. That is what you can bare minimum expect, that they should have understanding and some experience of the audit engagement in a similar way. So for example, if you are talking about an audit engagement of an automobile industry, so what you can expect as part of the quality management process is that your engagement team should have some or the other experience or knowledge regarding that particular sector, which is automobile in this particular case, and they should be aware about the complexity through appropriate training and participation, as in either they could have the relevant experience or the audit engagement partner could train them. Okay, because who is the responsible party here? The engagement partner is the responsible party here. An understanding of professional standards and regulatory and legal requirements, that is, they should be well aware about what the ISAs say, what are the ethical standards, what are the technical standards, what are other standards which are relevant towards the audit and assurance engagements. Okay, and regulatory and legal requirements. Now, appropriate technical knowledge including knowledge of relevant information technology, that is, they should have the relevant technical knowledge. Whatever is required as part of the audit procedures, they should be well aware and well knowledgeable about it. One such example could be, say, Excel. Okay, so if there is an auditor, they should be expected to have the existing knowledge of Microsoft Excel, because that is required as part of the audit engagements generally, right? In certain cases, there are requirements of, say, bigger tools, say Python, say Power BI, then they should be well aware with those procedures, with those tools as well. Now, knowledge of relevant industries in which the client operates. See, in my particular case, I took the example of automobile, right? So if any person is auditing the client which belongs to the automobile industry, they should be well aware about that what are certain important metrics, what are certain important criteria in the automobile industry. In short, all of these points are saying that the auditor, that the audit engagement team and the auditor should be well aware about the industry in which they operate, either through past experience or through the knowledge that is provided by the engagement team or the engagement partner. Now, ability to apply professional judgment. This is very, very important in every case. In every case, this is very, very important that the person who is conducting the audit should be in such a way, should think in such a way that they are able to apply the professional judgment. What is the meaning of professional judgment? That they are able to consider all these standards and then they are able to form a rational judgment. Now, an understanding of the firm's system of quality management. Now, what happens is, this we will understand a little later. Okay. However, this is not part of our technical AA syllabus, but we will be discussing about it in some way, because there are quality management procedures for the firm level also. See, as of now, what we are studying quality management for engagement level, correct? But when you move to the advanced level, which is advanced audit and assurance, there would be one more standard which would be for the firm level, quality management for the firm level. So what they are saying is that they should have good understanding, even if they are not teaching you that here, but they are saying that the particular person, the particular auditor should have good understanding about the quality management procedure for the firm as well. For example, I used to work at one of the big fours, so I was required to have sufficient knowledge of the quality management procedure that is followed at big fours. That is very, very required over here. Okay, I hope this is clear. I hope this is clear. I hope this is clear. Yes, I hope this is clear. Okay, now second one is engagement performance. What did we study in engagement performance? What did we study? Takes responsibility for DSR. Do you remember the meaning of DSR that we studied? DSR, design, design something, design, then anybody, design, then anybody, design, then anybody else, design. S means what here? S means what? S means supervision. R means review. So design, supervision and review, and consultation and EQR. Okay, so this is what means the engagement performance. That is your direction, not design, direction, supervision and review. Your direction, supervision and review should be appropriate. Your direction, supervision and review should be appropriate. Your direction, supervision and review should be appropriate. Now when I say direction, what do I mean by it? When I say direction, what do I mean by it? Okay, so the engagement partner provides direction. The engagement partner, who? The engagement partner provides direction to the engagement team by informing engagement team members of the following. That is, who has the responsibility to direct the engagement team? The engagement partner has the responsibility. And what is the responsibility? That they should direct the engagement team on the following matters. Their responsibilities. Whose responsibilities are we talking about? The team members. Their means team members. Okay, team members' responsibilities, including the need to comply with ethical requirements, and to plan and perform the audit with professional skepticism. What is the professional skepticism? The general meaning is questioning mind, having a questioning mind. That is, it is the responsibility of the engagement partner to aware the team, the engagement team, about what? About the ethical requirements and whatever other procedures are required as part of the audit. That is, engagement partner should make the team aware about the ethical requirements, as well as that they need to maintain an attitude of professional skepticism. Now, the objectives of the work to be performed. See, what happens is, a lot of times you might say that the engagement team is just told what to do, but they are not aware about the objectives, why they are doing such a thing, and what is the ultimate objective that they are trying to achieve. And in that particular manner, when they are not aware about that what is the objective of this particular procedure or this particular engagement, then how will they be able to form a rational judgment? How will they be able to solve the problems? How will they be able to raise the right questions, right? So that is why it becomes very, very important for us. So the objectives of the work to be performed should be well explained to the engagement team member. Via whom? Via the engagement partner. Now, the nature of the business. See, it is very, very important for us to understand that the engagement team members are generally the junior team members. Okay, a lot of times the engagement team members, whenever we are saying the engagement team members, it does not mean the senior manager or the partner. It means the executives, it means the assistant managers. Now here they need good understanding of the nature of business in which the client is operating, because the partner or the senior manager might already be aware about it through their experience or knowledge. Now, risk related issues. What happens is, a lot of times there are certain risks which are being made aware to the engagement partner, or engagement partner knows about it, but the team might not know about it. So it is the duty of the engagement partner under the direction point to grasp that knowledge, or to inform that risk, or to inform about those risks to the engagement team members as well. Now, problems that may arise. This is very important for us to understand that there might be certain problems that might arise as part of our procedures, as part of our audit process. So what happens is, the engagement partner has the responsibility to make the team aware about that what problems could arise and what could be the possible or potential solutions towards it. Now, the detailed approach to the performance of the engagement. That is, what is going to be a detailed approach, when we are going to start, when we are going to finish, what tools are we going to use, what consultations are we going to use. Everything should be given and directed by the engagement team partner. So that is something that we are studying under direction. That is, it is the responsibility of the engagement partner to direct the engagement team members about certain important areas, like the risk, like the controls, like the procedure to be followed, like the overall timelines, everything. Okay, now direction is provided using the following communication tools. Direction is provided using the following communication tool. Number one, team briefing. A lot of times team briefing meetings are there, right? So we can generally call it as meetings. Okay, then audit program. You know, in my case, when I used to work at Bahrain, every time we used to start with a new client, what used to happen is there used to be a team briefing meeting, where as an assistant manager, I was also required to brief my team about what are the objectives of the engagement, what is expected out of each team member, and everything used to be documented also. Audit program. When I say audit program, that means that when we are going to start, when we are going to finish, what procedures we are going to apply, who is going to be the team member, what is going to be the responsibility of each of the team members. Then time budgets. That is, what time do we have and how do we need to budget it to gain the efficiency and to achieve the desired objectives within the due timelines. Then overall audit strategy and plan. Now we will be discussing about this audit strategy and audit plan in detail because these are technical terms. So from here, this point, we will develop two terms. One is audit strategy and another one is audit plan, and we will be having a detailed discussion about it in our further chapters. Okay, so you need to be in the class when we will be discussing, because this audit procedure, this audit strategy and audit plan is going to be very, very important for all of us for the examination purpose also. Now second thing, supervision. So elements of direction and review. Why I have written elements of direction review? Because when I say supervision, what do I mean by it? That in case of supervision, there is a mix of elements of direction as well as review. Direction is something that we have already studied, review is something that we are going to study, and that is why I have kept supervision in middle, because it has elements of both direction as well as review. Now functions of personnel carrying out supervisory responsibility includes, that is, whosoever is the supervisor, generally the manager or the senior manager, the supervisor, right? Their function includes to monitor progress, to consider whether assistants have the necessary skills and competence or not, assistants understand the audit direction or not, because what happens a lot of times is that assistants are just doing the work, they are not even understanding that what they are doing, but they are doing the work because their senior has told them to do. So it should not happen. Okay, now work is being carried out following the overall audit plan and the audit program. What did I say? We will have to cover this audit plan and audit strategy in detail before we move further to our chapters, because this needs immediate attention and this will keep on coming on every second point. So that is why when we take up the next few chapters, we will have to cover this audit plan and audit strategy on priority. Okay, now to become informed of and address significant accounting and auditing questions. See, what happens is, in one of my cases, what happened was I made a mistake there because I was the assistant manager assigned to it. What happened was that I left my team for say 10-12 days. I explained them everything, okay, and I told them that if you have any questions, please feel free to come to me. Okay, I was not at the direction level, I was at the supervision level, okay, as an assistant manager. So what happened was I left my team for say 10 to 12 days. Okay, when I came back after 10 to 12 days near the due timeline, I asked them that did you do every work, and they said yes, we have done certain works, but there are certain questions which are pending. Okay, I asked them that why did you not ask me this question? So they told me that you are not reachable, that is why we have not asked you this question. However, the questions are ready, we can ask now. I told them that now we have very less time available to resolve these queries, and that is why it is going to be a little bit of problem. But then I realized that as a supervisor, it is my responsibility to do what? To become informed of and address significant accounting and auditing questions. Now to resolve, this is my responsibility as a supervisor, to resolve if possible any differences in professional judgment between personnel. See, what happens is a lot of times the same thing is looked professionally different by different people. Okay, so for example, what could happen is that there's an issue, I consider it as a very minimal issue, but some of my team members could consider that it is a very big issue. Now I cannot say that I am the boss and whatever I am deciding we will do that. No, I have to explain them that what is making me consider it as a minimal issue, what is the materiality requirement, why are we not reporting it, and once they are convinced, then only I should move forward, because I have the responsibility to make them gain experience as well. So to resolve if possible any differences in professional judgment between personnel. But why have we written if possible? Because just in case, even after all the rational judgment, if they are not getting considered, if they are not getting convinced, then what we should do? We should follow the supervisor's responsibility over here, we should follow the supervisor's direction over here, whatever they are saying, we have to follow that. Now to identify matters for consultation by more experienced engagement team members. See, what happens is a lot of times when we perform the engagement, there might be certain matters. For example, in one of my clients, there came a very specific transaction regarding the Bitcoin. Okay, now when I wanted to audit Bitcoin, I was not experienced over it, but there was one of my seniors who was very good experienced, who was very well experienced on the audit of Bitcoins. So what I did is I took his consultation, I reached out to him, I took his consultation officially, okay, on records. I went to him, I booked a meeting, I took consultation, and then I came back and explained my team members how to do it. So to identify matters for consultation. Consultation could be internal, consultation could be from the outside people also. Sometimes you might need the legal advice. So For what matters you need the legal advice, for that also you should have you should identify the matters. So what are certain points? To monitor progress, to become informed, to resolve. I hope this is clear. Please let me know in the chat box. I hope this is clear. I hope this is clear. I hope this is clear. Yes, I hope this is clear. Yes, I hope this is clear. Yes, I hope this is clear. Okay, okay, understood. Now review. This becomes really important because this is talking about the review stage where the seniors would be reviewing the work of the juniors. So most experienced team members review the work performed by a team member. Generally, this most experienced means what? This most experienced means what? The engagement partner. The engagement partner. This is the general meaning of most experienced team members. Okay. Reviewers consider whether the work has been performed in accordance with professional standards, regulatory and legal requirements. Work has been performed following the audit program. Again, the repeated points, right? That is why we are not explaining. What we are doing is we are marking it that we have already covered it. Just in case if you have any questions, please feel free to ask. Okay. There's a need to revise the nature, time and extent of work performed. Work performed and results obtained are adequately documented. Now this audit documentation is also covered as part of our syllabus, but it is covered at later stages. Audit documentation. Okay, so we will cover it, that what is the appropriate documentation, what is the adequate documentation. Then all significant audit matters have been resolved, because we just discussed about resolution, right? Raised for further consideration, that is the consultation, or are reflected in audit conclusion, that is we have modified the report because of that. Objectives of audit procedures have been achieved. We discussed about that one of the core meaning of direction is to achieve the audit objectives. Now audit evidence is sufficient and appropriate to support the audit opinion. What is the meaning of sufficient? We discussed on lecture number 1. Sufficient means quantity and appropriate means quality. That is, we have the sufficient quantity and the appropriate quality of audit evidences to reach to our audit conclusions. Then conclusions expressed are consistent with the results of the work performed and supports the audit opinion. That is, whatever conclusions we have drawn, that is based on the evaluation of evidences, and the opinion that we have issued, that is also consistent with our approach and whatever evidences we have gained. Now the following must be reviewed on a timely basis. On what basis? Timely basis. What is the timely base? 1 month, 1 week, every 15 days, every quarter. What is the timely basis? As required. Timely means here what? As required. Okay, when I say timely, it means as required. So overall audit plan and the audit program, that should be reviewed. Assessments of inherent risk and control risk, that we have already covered. Documentation of audit evidences obtained from substantive procedures, that we will cover, but we already know the meaning of the substantive procedures, which includes TOD and analytical procedures, that we have covered in our basics, right? Lecture number 1, basics. Financial statements, proposed audit adjustments and the proposed auditor's report. That is, what is the final structure of the financial statements, what are the proposed audit engagements, and what is the proposed audit report, and what adjustments are we going to do over there. Okay, I hope there is no query here. If you have any questions, please feel free to ask me. I can read your chats. If you have any questions, please feel free to ask me. Yes, if you have any questions, please feel free to ask me. Yes. Now let's go for engagement quality review. Before we move here, I would like to explain you certain process over here. Okay, now tell me one thing. What has happened is that in my particular firm there are 4 partners. Okay, there are 4 partners. These 4 partners have a regular job of signing the financial statements. Okay, they generally sign very big audited financial statements. There is no issue. They sign the listed companies and every bigger risk companies. Okay, now there's a 5th partner. Okay, since we all had a lot of clients, so what we did is we gave each one of us gave one client to this new partner. Okay, the 5th partner, we gave one client of ours to him. to the fifth partner. Okay, now this fifth partner is conducting the audit of the listed entity for the first time maybe. Okay, don't you think there's a bigger risk? Don't you think that there's a bigger risk that his conclusions might not be appropriate for the given client? Don't you think so? There's a big risk over here. Don't you think there's a big risk over here that the conclusions derived by this partner might not fit the listed client's case, because it is the first time that this person is conducting the audit of a listed company? Can this happen? Can this happen? Can this happen? Also, from the firm's point of view, if I say, then what might happen is that this partner might make certain assumptions which might not be true, which might not be appropriate if we look at the quality management procedures of the firm, right? That could happen. That is a very big possibility that this could happen, right? Now, to avoid that, what could happen? So, this engagement quality review is the answer to that problem. What happens in this engagement quality review? A senior member, either from the firm or outside the firm, could come and review the work of this particular person. Okay, so engagement quality review is there, and the person who performs this, that person is called as engagement quality reviewer. So, what is engagement quality review? An objective evaluation, that is unbiased evaluation of significant judgments made by the engagement team and the conclusion reached thereon, performed by the engagement quality reviewer and completed on or before the date of the engagement report. That is, before issuing the engagement report, this process is done. What is this process? The objective evaluation of what? Of the significant judgments made by the engagement team member and whether the conclusion reached is supported by the relevant evidences or not. Who performs it? A partner, other individual in the firm, or an external individual. That is, it could be a partner of the firm, maybe the senior partner. It could be other individual of the firm who is senior to the partner who is signing this report, and an external individual could be one appointed by the firm to perform the engagement quality review, and this person would be called as what? Engagement quality reviewer. I hope this is clear. Now, this EQ stands for engagement quality. Engagement quality reviews are required for audits of financial statements of listed companies and unlisted companies when deemed necessary by the firm. That is, these are mandatory for listed companies and voluntary for unlisted or public companies. Okay, I hope this is clear. Yes. Now, the engagement partner is required to. Engagement partner, who we are talking about? The original partner who is signing the report. The engagement partner is required to do what? Determine that an EQ reviewer has been appointed. What he has to do? He has to get one EQ, engagement quality reviewer, appointed. Cooperate with the engagement reviewer. Of course, whatever information he or she is asking, we should be able to submit it. The engagement partner should be able to submit it. Then discuss significant matters arising during the audit with the engagement quality reviewer. That is, whatever significant matters are already in the knowledge of the engagement partner, they should be able to discuss it with the engagement quality reviewer. Not issue the auditor's report unless completion of the engagement quality review is done, because this engagement quality is required to be completed before we issue the audit report, and that is why the auditor should do what? The auditor should wait till the engagement quality review is completed, and then they should be able to issue the report. Now, monitoring quality. When I say monitoring quality, so there is pre-issuance review and then there is post-issuance review. What is this monitoring quality? This is one part of our quality management discussion only that we did. See, we discussed about monitoring and remediation, no? This point. So it is that point only. Okay. Now we are about to complete this chapter. So, pre-issuance review is called as hot review and post-issuance review is called as cold review. What is pre-issuance review? Pre-issuance review as in just like EQR, it is done before we issue the audit report. What is called as cold review? That is post-issuance review. Once the audit report is issued, then what happens is on a rotational basis certain audits are picked up and the senior person reviews it to check whether everything is appropriate or not. Just in case it is not there, we evaluate whether the audit report needs to be changed. If yes, we change it. If not, then we note it down. We note the improvements for the further audits. Okay, now conducted before auditor's report is signed and issued. The hot review aims to ensure that audit file supports audit opinion just like EQR. Then usually apply to high risk audits where audit opinion is modified and to the largest clients of each partner, like the listed companies, right? Whereas when we talk about the cold review, it is conducted after the auditor's report is issued, recommendation must be followed up to ensure implementation. That is, whatever recommendations are given in this review, in the post issuance review, in the code review, that needs follow up. That is, whether they are being followed up by the engagement partner in the further audits or not. Then time consuming, so applied to selected audits covering all partners and managers on a rotational basis. Like we discussed, let's say every partner has 100 clients, so 1 or 2 or 5 clients should be picked up, and then the engagement quality review should be done, or the quality review should be done here, which is the post issuance review. Now, compliance with ethical requirements. Compliance with ethical requirements. So engagement partners should remain alert for evidence of non-compliance. Engagement partners should remain alert. When I say alert, they should maintain an attitude of professional skepticism. They should maintain an attitude of professional skepticism for the risk that could be assigned to the particular engagement, or for the risk that could come as part of the particular engagement. Now, engagement partners should identify any threats to independence and take appropriate action to eliminate such threats by applying safeguards or withdrawing from the engagement if appropriate. That is, engagement partners should try to apply the safeguards. The safeguards is something that is the corrective actions, and they should evaluate that whether they need to apply the safeguards over here. That is, if they change certain actions, if they take certain decisions, if they do certain actions, will this be rectified, or if it cannot be rectified, the risk is so high, then what they should do, they should withdraw from the engagement if appropriate. I hope this is clear, there's no issue. I hope this is clear, there's no issue. I hope this is clear, there's no issue. Yes, what do you say? I hope this is clear. Please let me know in the chat box. I hope this is clear, there's no issue here. Yes, I hope this is clear. Yes, what could be the safeguard? What could be the safeguard? Okay, I'll tell you. What happens is, for example, if the engagement quality reviewer has concluded that you have taken less samples for, say, property, plant and equipment, okay, you should have taken more samples. So what they can do, they can obtain more samples as of now. That is applying safeguard. Okay. Okay, great. Okay, so now that day we solved 10 questions. We solved 10 questions of chapter 2. Okay, I have total 19 questions. How about we solve the remaining 9 questions today of chapter 2? These are concept MCQs. Okay, this is very important. These are concept MCQs. Okay, so how about we solve these questions? What do you say? The 9 remaining questions, then we can take a 2-3 minutes break, and then we can move to chapter number 3. Yes, please tell me. Let's solve the questions now. What do you say? Let's solve the questions now. What do you say? Yes, what do you say? Yes. Okay. Let's take question number 11. Who is responsible for preventing? And detecting fraud? Who is responsible? Yes, please tell me, who is responsible for preventing and detecting fraud in a company? External auditor, audit committee, management, or shareholders? Is it the external auditor? No. Why not? Because auditor has the responsibility to respond appropriately to it. We will be discussing it into a standard. Okay. But auditor does not have the responsibility to prevent. Audit committee. Who is audit committee? What is audit committee? We will be discussing in chapter number 3. What is audit committee? Okay. Yes. Management or shareholders. If we give this responsibility to shareholders, then they'll have to come to office every day, review every transaction. So shareholders could not be one. we are left with audit committee and management, then yes, the management is the answer. Okay. Now, which of the following is not a benefit of an external audit? Not a benefit. Increased credibility of financial statement, it is a benefit. Assurance to shareholder, it is a benefit. Guarantee of profitability or improved confidence. So improved confidence in capital markets, that is also a benefit. But the guarantee of profitability is not something that is the benefit. Now, who normally determines the level of audit fee? Who normally determines the level of audit fee in an external audit? Who normally determines the level of audit fee? That is, who decides the audit fee? Management and audit are subject to shareholder approval, shareholders directly, audit committee alone, regulators. Who does it? Who does it? Who does it? Who finalizes the audit fee? Audit remuneration, auditors remuneration. Who does it? Who does it? Tell me. Yes, who does it? The audit committee alone. You are saying audit committee, okay? Say, I will say shareholders directly cannot do it, regulators cannot do it. But when you come to say audit committee alone, so audit committee can only recommend. Okay, we will be discussing in chapter number 3. That is not an issue if this answer is wrong. But in chapter number 3, we are going to discuss that what are the roles and responsibilities of audit committee. So audit committee recommends, not approves, not finalize. So that is why the first one, that is management and auditor negotiate the remuneration, and final the approval is taken from shareholder. Okay. Okay. Now, an external audit engagement letter primarily serves to audit engagement letter, although we will be discussing it under ISA 210, but an external audit engagement letter primarily, audit engagement letter is just like the agreement between the auditor and management. So reduce audit fee. Reduce audit fee? No. Define the scope and responsibilities of auditor? Maybe. Guarantee no fraud will occur? No. Replace audit statutory requirements? No. Statutory requirements anyways needs to be followed. So that is why B option. Now, which of the following is a key difference between external audit and internal audit? Difference between external audit and internal audit. Okay, external audit reports to shareholders, internal audit reports to management. That is not the key difference, maybe. External audit focuses only on controls, internal audit on financial statement. No. So this is definitely no. Okay. External audit is optional, internal audit is mandatory. Definitely no. External audit is independent, internal audit is not. That is also not mandatory. So we have to select option A or D. Tell me which one. External audit reports to shareholders and internal audit reports to management, or external audit is independent, internal audit is not. A versus D. Which one is correct? Which one is correct? Which one is correct? Yes, tell me which one is correct. Tell me. A. Yes, correct. External audit reports to shareholders, internal audit reports to management. Because external audit is independent, this is statement true, but internal audit can also be independent, and that is why this is statement option D is not correct. Now, which of the following best describes the expectation gap? Which of the following best describes the expectation gap? Which of the following best describes the expectation gap in external auditing? So the difference between audit fees charged and the value of service? No. The difference between what users expect auditors to do and what auditors actually do? No. Can this be the right option? Yes, this could be, but let's read the other options. The difference between statutory and voluntary audits? No. The difference between internal and external audit? No. So option B is correct. Okay. Now, which of the following is a threat to auditors' independence? Now, this one you have to answer. This one you have to answer necessarily. This is important. Yes. Although we will be covering this in chapter number 4, professional ethics, we will be covering the basics today only, so you'll get to know about it. Which of the following is a threat to auditors' independence? Rotation of audit staff? No, this is not a threat, right? This is a normal business practice. Providing significant non-audit services could be one, but let's read the other option. Reviewing audit evidence, definitely not a threat. This is a plus. Submitting the audit report to shareholders, definitely not a threat. So option B is the one. Okay. Now, which of the following correctly states the auditor's responsibility regarding going concern? Which of the following correctly states the auditor's responsibility regarding going concern? To prepare forecast to ensure going concern? No. Why? Ensure. To guarantee the entity will continue? No. To assess and conclude whether use of going concern basis is appropriate? Let's see, maybe. D. To replace management's role in monitoring going concern? No. Why this one? We will get to know about it under ISA 500 series. Okay, there is one particular standard by the name of going concern, and that we will study over here. That is why C option. Okay, understood this one? A lot of you answered this as wrong. No worries, no worries, no worries, no worries. Now, why can't auditors provide absolute assurance? Why can't auditors provide absolute assurance? Why not? Why not? What is the meaning of absolute assurance? Maybe the 100% assurance, right? Because they lack technical knowledge? Definitely not. Due to limitations of audit evidence and use of sampling? Maybe. Because the regulators restrict them? No, regulator does not restrict them. Due to high cost of performing audits? No. Due to limitations of audit evidence and use of sampling. I hope this is clear. Any questions so far in anything that we have covered? Any questions so far in anything that we have covered? Any questions so far in anything that we have covered? Yes, any questions so far in anything that we have covered? So now we have completed chapter number 2 fully and we are ready to go to chapter number 3. Okay, so now we have completed chapter number 2 fully and we are technically ready to go to chapter number 3, which is corporate governance. This is a very important and very interesting chapter for your syllabus as well. Chapter 3, corporate governance. This is a very important and very interesting chapter for all of you. Okay, some part of it makes the discussion a little heavy, but don't worry, we are not going to do it today. Okay, yes. Okay, I hope this is clear. Okay, now let's take a 2 minutes break, then we will move further. Let's take a 2 minutes break, then we will move further. Okay. Okay, so welcome back. I hope you all are back. Please confirm me on the chat box if you all are back. Please confirm me on the chat box if you all are back. Yes, please. Please confirm me on the chat box if you all are back. Yes. Please confirm me on the chat box if you all are back. Yes. Now we will start with chapter number 3 and it is going to be very interesting for all of you because chapter 3 is very important as well as interesting chapter. Yes. Okay, now chapter number 3, which is corporate governance. Anybody who knows about this corporate governance? You might have heard in a lot of discussions that the corporate governance of the entity is messed up. The corporate governance of the entity is brilliant, right? What is the meaning of this word? Corporate governance. What is the meaning of this word? Corporate governance. What is the meaning of this word? Corporate governance. What is the meaning of this word? Corporate governance. What is the meaning of this word? Corporate governance. So generally it is defined as a system by which an entity is directed and controlled. A system by which an entity is directed and controlled. An entity is directed and controlled. So naturally, what are the people this discussion is going to talk about? Is it going to talk about the people with lower level management, middle level management, or the top level management? You tell me. Yes, you tell me. Are we going to discuss about the lower level managers here, the middle level managers, or the top level managers? What do you say? Whom we are going to discuss about here? Chapter number 3. Whom we are going to discuss about here? Chapter number 3. Tell me. Whom are we going to discuss about here? The top level people, the middle level people, or the lower level people? Yes, what do you say? Yes, what do you say? What do you say? The top level people, right? So we have to be very sure about this concept that whenever we think about corporate governance as a topic, we have to think only from the point of view of top level people. Okay. Now, what are certain objectives? What are certain objectives of this chapter? Okay. So discuss the objectives. Objective is to discuss the objective of what? Of corporate governance. Discuss the objective, relevance and importance of corporate governance. what are the meanings of these three terms? Let's discuss. Objectives mean what it is trying to achieve. Relevance, whether it is relevant to all companies, all industries, or is it relevant for some particular criteria. Or importance, what is the significance of it, what is the benefit of it, right? Objectives, what it is trying to achieve. What? Relevance, who is it relevant for, and importance, why. Okay, understood this point? Understood this point? Then let's understand the second objective. Discuss the provisions of international codes of corporate governance such as OECD that are most relevant to auditors. Are we going to cover this here? No, we are not going to cover this today. We are going to cover this in lecture number 4, which is the next lecture. Now, describe good corporate governance requirements relating to directors' responsibilities and the reporting responsibilities of auditors. Are we going to cover it today? No, we are going to cover it on Monday. But after this, there's one more objective, which is evaluate corporate governance deficiencies and provide recommendations to allow compliance with international codes of corporate governance. Are we going to cover about deficiencies here? No, we are not going to cover it today, but we are going to cover all the other important parts here, which forms the basis of corporate governance, and that will make all of the other discussion very easy and very understandable for all of us. So analyze the structure and roles of audit committee. See, from your chapter number 3, the most frequently asked question is of audit committee. The most frequently asked question is of audit committee. So what we will be doing is, we will be discussing about audit committee in detail over here. What is the composition of audit committee? What are the roles and responsibilities? What are various international frameworks for audit committee only? So we are going to discuss about everything related to audit committee today, okay? And discuss the benefits as well as the limitations of audit committee. So discussion today is going to be about basics of corporate governance and in detail about audit committee. And then we are going to discuss about important concept here, which is importance of internal control and risk management. And that is how we are going to close chapter number 3 today. What about these 3 objectives? This will be covered in lecture number 4, which is scheduled on Monday at 8 p.m. Okay, understood? Okay. Now, I was getting one query here, that will lecture 4 be on YouTube? So the answer is no. Lecture 4 is going to be on our app. Okay, which app? The BB Virtuals Global app. The BB Virtuals Global app. Okay, how do we register? So you can go to our website www.bbvirtualsglobal.com and register for our AA batch over there. Okay, understood? Understood? Yes. Now, let's go to certain key terms over here. So, what is corporate governance? Corporate governance is the system by which business corporations are directed and controlled. The system by which an entity or a business corporation is directed and controlled. When I say directed and controlled, as in how they are taken care of, how the top level management functions of that particular organization. That is the meaning of corporate governance. Although we will be discussing about it in detail, and then we will be able to summarize it in a little more manner. Now, those charged with governance, and we are going to call them TCWG going forward. Those charged with governance. This is just like we are pointing towards somebody, no? Those charged with governance. So that those charged with governance are the top level people who are given the responsibility of strategic direction of the company. So individuals with responsibility for overseeing the strategic direction of the entity, obligations related to accountability, that is they are accountable also. We have already discussed about the concept of stewardship, accountability, agency, right? So accountability, that is they are answerable on behalf of the entity, including overseeing the financial reporting process. That is, these are the people who have been given the responsibility of what? Of setting the strategic direction of the company, of the obligations related to having accountability, as well as overseeing the financial reporting process of the entity. Okay, please do not stop answering. You need to answer to connect. Okay, now management. What is the management? Management is generally the people who are involved in the day-to-day management, right? So individual with executive responsibility. Executive responsibility as in day-to-day responsibility, day-to-day operational responsibility for the conduct of the entity's operations. These 3 terms are clear? Any questions in these 3 terms? If yes, please let me know. Any questions in these 3 terms, please let me know. Yes, please let me know in the chat box. If there's any question on these 3 terms, please let me know in the chat box. Yes. If there's any discussion required for these 3 terms, please let me know in the chat box. Yes. Or we are good to go. or we are good to go? Confirm on the chat box. No, if you are good to go. For good to go, you can just write G. Clear? Okay, amazing. Now let's come to our first objective, which is objective, which is what? Objective, which is what? Objective, relevance and importance. So I have developed this chart kind of thing so that you are able to summarize it. Okay, do you need to remember these things word by word, the objectives, the relevance, the importance, word by? Definitely not. What you need to grasp is the concept. Up to here, whatever I have told you, just need to remember one thing, that is the definition of corporate governance and those charges governance. That's it. Okay, and the management also. Other than that, you do not need to learn anything. The definitions part you need to learn as it is. That is, you need to learn everything about it. But other than that, you only need to remember the keywords, or you need to remember the points over there. Okay. So now, objective, relevance and importance. So what are the objectives? Ethical and moral behavior of corporate management. That is one of the objective of setting a corporate governance code or having a corporate governance system is the ethical and moral behavior. That is, an organization should be handled in an ethical as well as in a moral with understanding, and that is one of the objectives of corporate governance. That is very, very important. Okay. Now, integrity, transparency and accountability in business activity. That is, there should be an element of integrity, transparency and accountability in business activity. That is the objective of corporate governance. How do they achieve this objective? We are going to study in the later slides. Okay. Then compliance with laws and regulations. See, once you have good corporate governance mechanism in your organization, it will ultimately help you to achieve all the laws and regulations, to comply with all the relevant laws and regulations as well. So you do not need to worry about that. Then securing reputation and confidence in attracting inward investment. What happens is, whenever you go to any investors, what they ask is, they ask for your corporate governance report. That is, whether the meetings are being scheduled appropriately or not, whether there are relevant people sitting at relevant positions or not, what are the qualifications of those relevant people. Everything is being judged, and that could be analyzed via the corporate governance report. So I hope the objectives are clear. The ethical and moral business activities, integrity and transparency, compliance with laws and regulations, securing reputation. Now, relevance. What do you think? All entities are subject to corporate governance, or there might be certain criteria? What do you say? It is for all entities, or certain criteria could be there? What do you think? What do you think? Corporate governance is mandatory for all entities, or there could be certain criteria? What do you say? What do you say? What do you say? There could be certain criteria, or is it required for all companies? What do you say? Yes. So generally, all corporate governance regulations are aimed at listed companies. That is, listed companies is something that all corporate governance regulations are made for. However, can unlisted company also have corporate governance mechanism? Yes. But why only listed entities? Why only listed entities? Why only listed entities? Why only listed companies? Because there is separation of ownership and management or control. That is, the people who are controlling or the people who are managing the company are different from the people who owns the company. Generally, in my case, I have, say, 1000 shares of a particular company. Okay, I am the shareholder, and maybe I am one of the shareholders who has, say, 1000 shares. Okay, now I am the owner of the company, but I have appointed directors over there. I have given them responsibilities to manage the company. In this particular case, corporate governance requirements becomes really, really important. So where there is separation of ownership and management, as there can be severe losses, because of mismanagement and poor decision making, and corporate governance helps us to ensure that there is lesser mismanagement or lesser poor decision making in the organization. I hope this is clear. Now the third one, importance. So research shows that entities that takes, what is the CG? What is the CG? Corporate governance. Okay, what is the CG? Corporate governance. Research shows that entities that take corporate governance practices seriously are more prosperous, crucial to a company's ability to generate sustainable growth, that is future oriented also. In simple terms, although there's a big meaning of sustainability, then risk that weak corporate governance will lead to financial losses for entities and shareholders. Do you need to remember these points word by word? No. Do you need to write a generalized answer over here? Again no, because generally this is not asked also. Okay, what is the objective, relevance and importance? But please give it a good read and tell me if you need any understanding. Yes, please take 2 minutes and tell me if you need any understanding over here, or please confirm on the chat box that we are good to go. Either write please good to go, or please let me know if you have any confusion over here, because although this is not directly asked, but this is important. So please tell me. Yes, objective, relevance and importance. Objective, relevance and importance. Yes, please tell me. Yes, please tell me. Good to go. Thank you, Swapna. Okay, what about others? Okay, great. Thank you. Now we are at the discussion of audit committee. Okay, and let me show you that what we are going to discuss regarding it. So we are going to have a basic discussion of audit committee first, then we are going to have a good discussion on the composition, and composition is something that is really important from your exam point of view also, because it is generally asked in the examinations. Okay, then we are going to go for main roles and responsibilities of audit committee. Then we are going to go for key points from FRC guidance on audit committees. Then we are going to go for the key points from audit committees and external audit minimum standard, that is a code that is passed in UK. Okay, and then we are going to go for benefits and limitations, and that is how we are going to close our today's discussion after having the last discussion on internal control and risk management. Understood this point? And then we will be covering the next 2 to 3 objectives in the next class. Okay, I hope this is clear. Now the audit committee. Before I move further to the text of the audit committee, let me explain you certain example which helps you to understand why there is an audit committee and what are the certain other words that we need to study before we study the audit committee. Now tell me something. There's this board. Okay, it's just like a round table. Okay, it's just like a round table, the oval shaped table, and so many people are sitting over here. One person sitting over here, one person sitting over here. Okay, then 3 are sitting over here, then 3 are sitting over here, then 3 are sitting over here, then 3 are sitting over here. Okay, now these are the people who generally manages this company. Okay, so this is generally the chairman, this is generally committee 1. Okay, sorry, committee 1, this is committee 2, this is committee 3, and this is committee 4. Now tell me one thing, if we do not divide this committee and every one of them has the right to take the decision, and they have to take a decision collectively on one thing, do you think it will be an easy process, or it might have a lot of challenges to agree these people on something where all of them needs to vote? Tell me one thing. I am giving you very raw, very generalized example first. Okay, so if you have to take one decision, what is a wise decision over here? That give that responsibility to say 2 people, give that responsibility to only 1 person, or give that responsibility to everybody, that is every one of them needs to sit together and take a decision. What is the better option? Option A is 1 person, option B, 1 committee should have the right to take the decision, number C, chairman alone, on number 4, all of them will collectively take the decision. What is the wisest option? What is the wisest option over here? Tell me, what would be the wisest option over here? What would be the wisest option over here? Tell me, what would be the wisest option over here? Yes, what would be the wisest option over here? What do you say? What would be the wisest option over here? What do you say? Yes, what would be the wisest option over here? Committee to give recommendations to board. Okay, committee to give recommendations to the board, right? So that there came the 5th option, which is board only, however on recommendation, that is they cannot go beyond the recommendation, but on recommendation of a committee. Okay, in majority of the cases this E option is the right option, that is the board will take the decision, everybody will take the decision, but the recommendations would be given by one particular committee. You know, one such committee is the audit committee. So maybe in this case this committee 1 could be called as audit committee. Okay, but Audit committee comes with its own challenges. That is, these three people should have some particular criteria fulfilled. Only then they could be appointed as the members of the audit committee. Okay, so we are going to understand each one of them, and please understand this not from a theoretical point of view but from a very understanding point of view. What I have given you in the form of a diagram is the reality. Okay, now audit committee is mandatory for a listed company. True or false? Yes. It is considered as one of the best practices for unlisted and other entities. True or false? Yes. That is, every listed company should have a process of audit committee, should have an audit committee in its board. However, for unlisted and public entities also, it is considered as the best practice to have one audit committee, although it is not mandatory. Okay, so I'll just write it over here. That is not mandatory. Okay, and here it is mandatory. Okay, through the audit committee, external auditors are responsible and report to the shareholders, not the executive management. Now, where we will understand it? We will understand it more when we will move to the next portion, where we will be discussing about roles and responsibilities of the audit committee. Then we will discuss about that how external auditors are able to communicate in a better way to the shareholders via the audit committee. Hello. Yes, thank you. Okay, now the audit committee enhances the external auditor's independence. How? We will check it, but let me tell you right now in some words that audit committee ensures that the auditors are independent, and that is how they are able to check it, okay, and enhance it, and provides greater independence for the internal auditor. Okay, now the composition. I discussed about three people, right? Three directors who will form the audit committee, right? So at least three directors are there, but these three should be independent. Now, what is the meaning of this word independent? What is the meaning of this word independent? Who are not dependent, but that is just the English response. Let me give you the legal response. Okay, not dependent, that is they do not have fiduciary as in financial relationship with the company above certain limits. That is, there are certain limits that are being classified. For example, in India, the independent director should not hold more than 2% of the paid up share capital. Okay, so for example, this could be one requirement. There could be different requirements in different regions. So independent as in not independent, that is they do not have fiduciary relationship with the company above certain limits. Now, not just fiduciary plus business relationships. Okay, plus business relationships as per the guidance. Business relationship as per relevant guidances. Whatever jurisdiction you are in, you have to follow that particular guidance. Okay, that's what is the criteria of independent. But these three directors should be independent, and NED. NED stands for what? NED stands for non-executive directors. NED stands for non-executive directors. When I say non-executive directors, what do I mean by it? The directors who do not take part in the active management of the company, that is, they do not form part of the day-to-day managers of the company. I hope this is clear. But I have a question here, okay, and you have to answer this with logics, not any law or anything. Okay, audit is considered as one of the most riskiest areas. Okay, it has direct impact on the financial statements as well as the relationship with the shareholders, and we are giving this big responsibility in the hands of the independent people who do not have any dependence over the company. They can do anything, they can take the things very lightly also, right? But generally they do not, because these are very responsible people. Okay, whatever they get out of the company only. However, they do not get the fixed remuneration, and that is why they need to be independent. So whatever happens with the company, they should not be affected by it. That is the approach. If that is the case, only then they will be able to give the right recommendations, take the beneficial decisions, and that is why this is very, very important. So at least 3 independent non-executive directors. Did you understand this? At least 3 independent non-executive directors. Unless you write this full sentence, the answer is not correct. Is it going to be asked? Yes, I am very, very sure it is going to be asked, because that has been a general pattern of asking this. Okay, now at least 2 for a small company. That is,
for a normal company there should be at least 3 directors, 3 independent non-executive directors, but for a small company there needs to be minimum 2 directors. Okay, understood? Okay, now at least one member must have recent and relevant financial experience. At least one member must as in mandatory, have recent and relevant financial experience. Recent and relevant financial experience. My friends, please do not try to Google this topic or read it from any other material which is not approved. Why? Because you might find written it over there that all the members of the audit committee must be financial experts. Sometimes you might be able to read it somewhere. Please do not consider it. In your syllabus, it is at least one member must have recent and relevant financial experience. That is, they should have certain exposure towards the finance. Okay, they should have certain exposure towards the finance, and at least one member. That is, 2 could be from non-finance backgrounds also. Understood this? That is, other 2 can be from non-finance or without finance experience. Understood? Understood this? But why the people who do not have any experience of finance will be given the responsibility of managing the audit? Because audit is not just about finance, audit is about risk assessment, and sometimes non-financial people might know the business risk. Say an engineer might know certain risks which are related to a software companies, right? So that is why. Now, as a whole, as in the committee combined, the committee must have what? Competence relevant to the sector in which the company operates. That is, they should have the knowledge of the sector in which the company is operating. I hope this is clear. I hope this is clear. I hope this is clear. Yes, I hope this is clear. I hope this is clear. Yes. Okay. Now there's a lot of reading portion over here, but we need to interpret it. Okay, we have to read it line by line because it requires the reading portion also, but we have to interpret it also. So main roles and responsibilities: monitoring the integrity of FS, provide advice where requested by the board, reviewing the company's risk management and internal control framework, monitoring and reviewing the effectiveness of the company's internal audit function, reporting to the board. But let's try to understand it in detail. Monitoring the integrity of the FS of the company and any related formal announcement. What happens is, a lot of times the board of directors might make certain announcement, okay, and that might not be consistent with the financial reports of the company, with the financial statements, or maybe the annual reports of the company. So one of the roles and responsibilities of audit committee is to ensure that whatever formal communication is going out of the company, that is inconsistent with the financial information of the company. That is, there is no inconsistency, there is no material inconsistency. Okay, so monitoring the integrity of FS of the company and any related formal announcement. Now the financial statement that are being prepared by the management, although it is not prepared by audit committee, but whatever is prepared by the management, that reflects the true and fair view. That is why the auditor's reports also goes to the audit committee and they review it and then they approve it. Only then it is finalized. So monitoring the integrity of FS. FS means financial statements over here. Okay, then the second point: provide advice where requested by the board regarding what? As whether annual report and accounts taken as a whole is fair. Annual report as in the detailed non-financial report, the other information, and accounts, that is the accounting records and financial statements as a whole, is fair, balanced and understandable and provides necessary information. That is, all the necessary information that was required to be provided in the financial statements or annual report, we have provided it, and we have provided it in the appropriate format, and we have disclosed all the required information. Okay, and that information is fair also as far as the given circumstances are concerned. Then reviewing the company's risk management and internal control framework. See, what happens is, generally I told you about the 4 committees, right? Out of these, second committee could be risk management committee. If this is the risk management, if there is a risk management committee which is anyways assuming the role of managing the risk of the organization, or the board has decided to do it via all the members, then it is different case. However, if that is not there, then reviewing the company's risk management and internal control framework is the responsibility of the audit committee, unless separate RM. This is RM. This is RM. RM means what? The risk management. Unless separate risk management committee or board decides to address it. Understood this point? Please let me know in the chat box. See, even if you are seeing it in a lag of say 7 to 8 seconds, then also it is fine, but please continue writing on the chat box so that we can understand what you are understanding, okay? Because it is important to attend the lectures, but it is more important to interact during the live lectures, otherwise the purpose of the live lectures gets unfulfilled, right? Okay. Now, monitoring and reviewing the effectiveness of the company's internal audit function. What happens is, when the internal auditors are hired, what are the roles and responsibilities of the internal auditors? Are they performing the work appropriately? Are they fulfilling the relevant responsibilities? Are they getting good access to the relevant information people within the company? Everything is made sure by the audit committee that everything is happening well. Just in case if audit committee is not present in the current year, so what they do is they continuously evaluate if there is a requirement of audit committee, and if yes, then they recommend to the board. Okay, so monitoring and reviewing the effectiveness of the company's internal audit function, and where there is not one, considering annual consideration is required. Okay, considering annually if needed and recommending the board. But my dear students, please do not get confused between certain points. Okay, let me tell you which points. So this one is of internal control, and this one is of internal audit, whereas this one is of internal control. Okay, so please do not get confused. A lot of students comes to me and says that these 2 points are similar. No, these are not similar. One is talking about internal controls, another one is talking about the audit, the internal audit. Now, reporting to the board on how it has discharged its responsibilities. Audit committee has a responsibility to report to the board that how the audit committee, it means audit committee has discharged their responsibilities. See, the work of the audit committee would be reviewed by the whole board. So they have a responsibility to submit to the board that how they have discharged their responsibilities and ask for feedback or recommendations. Okay, I hope this is clear. Can we move to the next point? I hope this is clear. Can we move to the next point? Yes. Now, key points from FRC guidance on audit committee. So see, you will have to give a good read to this point. Okay, this point as well as the next point. Okay, which is the key points from audit committees and the external audit minimum standard. But what I have done here is I have brought out certain points which are very different from the points that we have studied so far. So for example, in these key points from FRC, there are certain points which are repeated from what we have already studied. What I have done is I have eliminated those points and I have only mentioned the new pointers over here. So I'll highly recommend that you should read this particular point in full from the ACCA study hub, so that you get the good knowledge and the complete knowledge of it. Okay, now the company should provide an induction, but I assure you that there would not be anything that you will not understand. The company should provide an induction program to the new audit committee members, and definitely they should also try to evaluate if the current members require certain updates or other trainings. The committee should at least annually meet the external auditors and internal auditors without management. That is, this committee, the audit committee, should meet the external and internal auditors at least once in the year without management presence. Is this an important requirement? Yes, there could be MCQs to it, so please write it as an important requirement. Then the audit committee should be provided with sufficient resources to undertake its duties. Say, if audit committee requires to travel somewhere to certain factories to know the factual information, they should be given the relevant resources. If audit committee requires certain resources, certain access to documents or people within the organization, they should be able to get it. Okay, that is, there should not be any hindrances in the work of the audit committee. The committee is responsible for overseeing the company's relations with the external auditor as well as the internal auditor for that matter. Okay, now this is important point. The board has ultimate responsibility for an organization's risk management and internal control systems. Who has the responsibility? The board. Okay, that is all directors, the consortium of directors, the combination of directors. But the board may delegate to the audit committee some functions to assist the board in meeting with the responsibilities. That is, they may delegate to the audit committee some functions to assist the board in meeting this responsibility. That is, it is the responsibility of the board to do what? for the organization risk management and control. But board may do what? May delegate certain responsibilities to audit committee so that board could fulfill its responsibilities, because this audit committee members are also the responsibility or are also the members of the board, no? So what could happen is that the audit committee could get certain responsibilities, could get certain delegation of responsibilities from the board so that the board may be able to achieve the objectives. Understood this point? Does this point make sense? What do you say? Does this point make sense? Does this point make sense? What do you say? Does this point make sense? What do you say? Does this point make sense? What do you say? Does this point make sense? What do you say? Okay, now some students were asking me that if we want to connect with you, how do we connect? So see my friends, you can connect with me on following platforms. Okay, if you want to connect with me on YouTube, you can subscribe to my channel by the name of ACCA with CA Supreet Agrawal. ACCA with CA Supreet Agrawal, and I'll tell you that the description has the link also of all the things that I'm mentioning over here. Then in Telegram, I am available by the name of ACCA with CA Supreet Agrawal. Okay, on Instagram, I am available by the same username as YouTube. Okay, then if you want to purchase my course of AA or AAA, you should go to our website by the name of www.bbvirtualsglobal.com. Okay, and if you need any information, you can call us on the number given in the description also. Will the internal auditor not look at internal controls? Yes, internal auditor will look at internal controls, but audit committee has separate responsibilities towards the internal control as well as the internal auditor. See, audit committee looks after the work of the internal auditor. Via this, we cannot say that audit committee is responsible for internal controls also. That is why it has been mentioned separately that audit committee has responsibilities towards internal controls as well as the internal audit. Okay. Okay. I hope this is clear. Yes. Now, the audit committee should have primary responsibility for the appointment of the auditor. That is, audit committee recommends. Audit committee does what? Recommends. This primary responsibility means what? They recommend the appointment of the auditor. You know, even it is true that the board cannot directly appoint. If there is audit committee, then board cannot directly appoint the external auditors. Board has to take the recommendation of the audit committee, and then only they can hire the internal auditor, they can appoint the internal auditor. In case board is not hiring the person, not appointing the auditor which has been recommended by the audit committee, then they have to give reasons in their annual report also. So would you help us in resolving our queries we might face in audit subject in Telegram or other information? Okay my friend, I'll answer you this. First thing is that whenever there would be a query, okay, first thing is about the queries. Okay, first thing you can directly ask during the live sessions. For example, whatever we are discussing over here, when we will be completing all the lectures, okay, in all the lectures you will get this functionality that you can ask the doubts, okay, during the live lectures. Then even if you are not asking during the live lectures or you are watching the recording, maybe in our app there's a separate option of asking the queries. You can directly go there and ask the queries. Okay, if by chance it is not resolvable over there, you can also communicate to me on my Telegram channel. We can resolve your queries over there also, not an issue. However, you might not be required to talk to me on Telegram, because we will anyways be resolving most of your queries during the live session or on the app only. Okay, but just in case if it is required, there's a Telegram channel. You can definitely post your queries over there and we can discuss over that. Okay, I hope this is clear. Now the audit committee should approve the terms of the engagement and the remuneration to be paid to the external auditor. Should do what? Should approve what? The terms and the remuneration. Okay, should approve what? The terms and the remuneration. Okay, one favorite question of students: sir, will we get the notes? Will we get these notes? So the answer is yes, a big yes. Yes, you will be getting these notes. Plus a gift from me, which is the board notes also. As in, you will get the clean notes as well as the board notes where we have written the content so that you are able to understand it. Okay, board notes. Will we get the question banks also, the soft copy? Yes. The notes, soft copy, yes. Okay. In case of question bank also, you will get the soft copy. Board notes also, yes. So that you are able to resolve your queries there. Okay. Now, the committee should assess the independence or objectivity of the external auditor annually. We have discussed now that audit committee has a big responsibility towards external auditor, and in the objectives also we were discussing that in the main roles and responsibilities also we were discussing that audit committee enhances the independence of the auditor, right? How? Because audit committee assess the independence and objectivity of the external auditor on an annual basis. What is the meaning of this word independence and objectivity? We will discuss in chapter number 4, which is professional ethics. Are we going to discuss it today? Yes, the basics part we are going to discuss today only. Okay. Now, at the start of each annual audit cycle, the audit committee should ensure that appropriate plans are in place for the audit. Okay, should ensure that at the start they should ensure that appropriate plans are in place for the audit. That is, there is not being an audit which is based on the professional judgment of the auditor. There is an audit planning done and it is appropriate for the entity as well, because audit committee has big responsibility towards the entity. Now my friends, I would like to ask you something that you need to answer. Okay, I am ready to wait for 1 or 2 minutes, but you need to answer. Please tell me one thing, whatever content we are covering, okay, I am talking about the quantum of the content, the quantity of the content. Is it getting heavy? Is it getting heavy that we are covering a lot of content in each class, or is it manageable? What do you think? I am asking for your personal opinion here. Tell me. What do you think? Whatever we are covering, is it getting too heavy to manage in each class, or is it manageable? What do you say? Because we are anyways taking less chapters, right? We are taking 1 or 2 chapters only. That too, we are covering the topics in such a way that it is interesting for you as well, and we are solving the questions also. So is it getting heavy for you, or is it manageable? Is it getting heavy for you, or is it manageable? What do you say? No, so it is finding good, getting good conceptual clarity. That's amazing. That's an amazing stuff now. Okay. Now, the standard is applicable. See, these are key points from audit committees in the external audit minimum standard. Again, I will highly recommend you. See, I'll write it over here also so that you get the revision of it also. Okay. Recommendation. Okay. Bad at drawing, really sorry. Recommendation. Read in full from ACCA Study Hub. Just read once, okay? And this similar thing is there that I would like to say for here also. Okay. Oh, it went away. No worries. I'll write it manually. Recommendation. Please read in full from ACCA Study Hub. Will you read it? Will you actually read it if I write it? What do you say? Will you actually read it if I write it? Yes, you should. Thank you. Okay, now the standard is applicable to the largest UK listed companies included in FTSE 350 index. Okay, largest UK entities. Other companies may wish to apply its provision. That is, it is recommendatory. And in UK listed companies included in FTSE 350 index, it is mandatory. Recommended. Mandatory. Okay. Now, managing non-audit relationships with the audit firms. Why is it required? Managing non-audit relationship, because there is a concept of tendering. We will discuss it in further chapters. That there is a concept of tendering. where you might need to change auditors. So you should maintain non-audit relations with other auditors as well, so that when you are required to change the auditor, you should have certain options for the tendering purpose. Then tendering as in just inviting offers from different audit firms, that whether they can conduct your audit and taking their offers. Conducting the tender process and making recommendations to the board, as in who would be the best auditors in a given case. Review and monitor the content of the external auditor's management letter. Now what is this management letter? We will be discussing again in ISA 500 series. Okay, what is the written representation? It is known as written representation or management letter also, management representation letter also. So what they have to do is they have to evaluate whether the contents are appropriate or not. Will we get the understanding of it? Yes, it is covered in your syllabus, you will get the understanding of it, but now it would be a little difficult for me to explain you ISA 500 series, which is one part of it is written representation, so that is why it will be little difficult, so that is why we are not covering it over here. But whatever are the contents of it, this is just a representation letter which is given by management to the auditor, that we have given you all the information, that whatever was in our knowledge we have informed you about it also. So that management letter, the content of that management letter would also be reviewed by the audit committee. Now we come to our discussion of benefits and limitations. Benefits and limitations. Do you need to remember these benefits and limitations word by word? No. Do you need to remember these things word by word? No. What you need to know is you need to know the concept. For example, if I ask you today that what should be the composition of audit committee, so there should be minimum 3 directors, but these directors should be independent and non-executive directors should be there. In case of a smaller company, there should be 2. You should be able to say this. Okay, that's it. Okay, these are the keywords that you should remember, otherwise no. Okay, now benefits and limitations. Again, this is general benefits and limitations. Okay, let's have a quick reading of it. So benefits of having an audit committee in place is provide effective and informed oversight in helping to ensure market policies, market, public and stakeholder confidence in high quality financial reporting. That is, it enhances the confidence of general public in the financial reporting process and auditing process. Yes. It enables the board to delegate a thorough and detailed review of audit matters. Definitely yes, board can delegate its responsibilities to certain people, certain non-executive independent directors. Enable non-executive directors to contribute independent judgment on issues of critical importance in running the business, because generally non-executive directors do not get the representation in running the business, right? But in this case, if they are made the members of the audit committee, then they will be able to give their recommendation, they will be able to approve the certain workings which are the core of the business, even if they are non-executive directors, and offer the external and internal auditors a direct formal link to non-executive directors, because non-executive directors generally have power within the entity, because these are the people who are generally invited for this position. So external auditors and internal auditors will get direct access to them, and it will enhance the overall financial reporting process. Any difficulty, any questions, or you can say good to go on the chat box. Good to go? Yes, good to go. Tell me, good to go or there's any difficulty? Good to go or there's any difficulty? Good to go or there's any difficulty? Tell me. Good to go? That's amazing. That's amazing. Okay, now limitations. Okay, so may be considered as an unnecessary legal or regulatory burden placed upon the board, because then you have to find certain people who are ready to be non-executive also, who are independent also, and who wants to be part of audit committee also. So you need to fulfill 3 requirements. No, non-executive should be there, independent should be there, and should be interested in being part of the audit committee also. Right, so this becomes little difficult. The required time and expertise of entities makes finding suitable candidates harder. Yes, we have discussed it. Members may feel that the responsibilities and risk are too high than the reward. See, they are not getting any fixed remuneration from the company, they are not getting any profit share from the company, otherwise they will be dependent, and their risks are so high. They need to overview the financial reporting process, they need to review the reports before it is made to public. So that is why it is very risky position, and the rewards are not much. Issues with that balance of cost benefit: there could be more cost than benefit of having this overall audit committee process, because you cannot change the auditors unless there is a recommendation from them. You cannot do anything unless there is a recommendation from them, so it becomes little difficult with the time cost benefit. And only effective where they can operate as the governance codes intend, that is wherever there is sufficient respect is given, that is wherever there is sufficient respect is given, then only they can perform their procedures. Otherwise, imagine a situation that audit committee is going and saying that you cannot hire an auditor without my recommendation, and the chairman of the company, not of the committee, the chairman of the company is saying that, you know, I am the chairman of the company and I am going to do it. If they are not respecting the committee, then how will this company function appropriately? So only effective, this committee would only be effective where they can operate as the governance codes intend them to operate. Okay, now internal control and risk management, and once we cover it, we will be done with a topic other than those three objectives. So internal control and risk management, consider it as a very light topic, just give it a read. The board has ultimate responsibility for risk management and internal control, which we will be calling it as RMIC now, risk management and internal control. Are we already aware about it? Yes, including the board, okay, not audit committee, the board, not audit committee, not audit committee. Okay, determining the nature and extent of the principal risk it is willing to take to achieve its strategic objective, that is risk appetite. Let me explain this. The board has ultimate responsibility for risk management and internal control, including determining the nature and extent of the principal risk as in primary risk, and it is willing to take to achieve its strategic objective, that is evaluation. That is, board has the responsibility to do what? Evaluate the risk appetite. Risk appetite as in how much risk a company can take. Okay, it is willing to take how much risk a company is willing to take. Now ensuring that an appropriate culture has been embedded throughout the organization. Appropriate culture means what? Which supports the internal control and risk management procedures. Agree on how the principal risk should be managed or mitigated to reduce the likelihood of their incidence or impact in the future. Okay, so board has this responsibility to evaluate the principal risk, to evaluate that whether this risk could be converted into potential major risk and how do we reduce it or mitigate it. Then effective controls are an essential element of RMIC. What is RMIC? Risk management and internal control systems, and can cover many aspects of a business, including strategic, financial, operational, compliances. That is, there could be multiple risks that could be called as strategic, some could be called as financial, some could be called as operational, some could be called as compliance risk. Will we discuss it? Yes, we will be discussing it under ISA 300 series under planning stage. ISA 300 series under planning stage, we will be discussing about it. Okay. Now, the board should agree on how the principal risk will be managed or mitigated and which controls will be implemented. That is the responsibilities of the board, and they should agree that what procedures they are going to apply, what culture they are trying to develop over here. Okay. Then RMIC will include, RMIC system will include risk assessment, that is what risks are there. Okay. The information and communication systems, then how the information flows within the organization, then management or mitigation of risk, including the use of control processes, how the system of internal control process works, and processes for monitoring and reviewing their continuing effectiveness. That is, how do we make sure that these processes are effectively continued over time. Please allow me 1 minute. Okay, I'll connect my device to the charger. Please allow me 1 minute. Yes. Okay. So RMIC system will include what? A risk assessment, that is what is the process of identifying the risk, assessing the risk, identifying the potential risk, and how do we mitigate it. Then information and communication system, how the information flows internally as well as externally with the organizations. Then management or mitigating of risk, that once we have identified the risk, assess the risk, how do we mitigate it, how do we manage it. And finally the processes for monitoring and reviewing their continuous effectiveness, that is whatever procedure we have created, how do we monitor it, that whether it is appropriately working at the ground level or not, and if there are any changes required, and if yes, do we make those changes. With this we have completed those objectives. Let us come back to the objectives part here. Have we covered objectives, relevance and importance of corporate governance? Yes. Did we discuss about analyze the structure and roles of audit committees and discuss their benefits and limitations? Yes. Have we discussed about explain the importance of internal control and risk management? Yes. Now we are left with these three objectives which we will be covering on Monday, and we will cover the remaining portion of chapter number 4, and then we will be going for the questions, okay, of chapter number 1, 2, 3 and 4 as well. 1 we have already covered, concept questions of 2 have been covered. We will cover the study hub questions, and then we will go for the concept based question and study hub question of 3 and 4. With this we have completed chapter number 3 here. Now we have to go for chapter number 4, but before that let's take a 2 minutes break, okay, 2 to 3 minutes break. Then we'll go for the basics of chapter number 4, which is professional ethics, so that when we meet on Monday you are already clear with the basics, and we can move to the advanced version of chapter number 3 and chapter number 4 and complete it together. Okay, I hope this is clear. So let's take a 2 to 3 minutes break.
Okay, so now let's start with chapter 4. Let's start with chapter 4, but before that, please let me know if you are back. Please let me know if you are back. Please let me know if you are back. Yes, please let me know if you are back. Please let me know if you are back. Okay. Okay. So now we have to start with chapter 4, which is professional ethics and ACCA's code of ethics and conduct. Okay. So this is something that we are going to start with. Although we are going to cover it in very basics today, we are just going to cover the core concepts of this chapter, and then we are going to cover this chapter on Monday. So on Monday, what all things we are going to do? On Monday, what all things we are going to do? We are going to complete three objectives of chapter 3. We are going to complete remaining portion, which is very less, which would be very less after today's discussion. Remaining portion of chapter 4, and then we have to solve questions. We have to solve questions of chapter 3 and 4 plus ACCA study hub questions of 2. Okay, that is what we are going to do on Monday. Where you can access the class, you have to take a classes from our app, okay, or you can go to our website, which is www.bbvirtualsglobal.com. okay, that is how you have to enroll for our classes. Okay, if you want to go for lecture number 4 onwards. Now, chapter number 4, professional ethics and ACCA's code of ethics and conduct. So 5 fundamental principles of professional ethics are there. These 5 fundamental principles are integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. The first one is integrity. When I say integrity, what do I mean by it? Is it honesty? As in, if I say that I am honest, then do I have integrity? No, that could not be necessary. What happens is, integrity is a broader term. Okay, honesty is one thing, integrity is another. How I'll explain you. Okay, for example, I took your car and I crashed it. I took your car. I'm just telling you very basics of it. Okay, please try to understand in the very basic format only. So if I took your car and I crashed it, okay, but the real story is that I crashed it because I ran a red light. Okay, red light. Now I came to you and I told you that I have crashed your car. Is it honesty? Yes. Is it integrity? No, because I have not told you honestly. I have told you honestly, but I have not told you honestly that I have ran a red light. That's why I have crashed your car. So maybe I am honest with you, but what I am not straightforward with you. I am not straightforward with you. So honesty and straightforwardness together makes a person integrity. A man with integrity, a person with integrity. Okay. Then objectivity. What is objectivity? Objectivity means free from undue influences. Free from undue influences. Free from undue influences. Free from undue influences or unbiased. That is, if I am able to form a judgment which is free from any undue influences or which is not biased on any person, then I would be say that I have objectivity. Is it required? Yes, because in case of audit, you have to take a lot of professional judgments, and when we talk about those professional judgments, a lot of those professional judgments could lead to a situation where you might be biased. Maybe you like a certain person, maybe you do not want to report adversely on a certain person's work, and you might feel that you are not in an objective position. So it is very much important for you as an auditor to maintain the objectivity. Then confidentiality. You should not disclose the assignments or the information that you have gained as part of your professional assignment. What you should not disclose? You should not disclose the information that you have gained as part of your professional assignment unless required by law. If law requires it, if there are regulatory provisions that ask you for certain information and you have to respond to it, then you can, otherwise not. So protect client information unless disclosure required by law. Okay. Okay. Then professional competence and due care. Then professional competence and due care. When I say professional competence and due care, okay, when I say professional competence and due care, what happens is, in case of professional competence and due care, you have to be updated. That is, you have to continuously update what? You have to continuously update
your knowledge, skills and experience. You have to continuously update your knowledge, skills and experience. And diligent means you should not be negligent. You should not be negligent. Okay. Professional competence and due care is updated plus diligent. Professional behavior. Professional behavior means what? That you should follow laws and avoid discrediting the profession. You should follow the appropriate laws and regulations and avoid discrediting the profession. That are certain fundamental principles of professional ethics. Now I am removing the iPad. Please tell me what are certain fundamental principles of professional ethics? Tell me. Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. Can you write on the chat box for me? Can you write on the chat box for me? Can you write on the chat box for me? Can you write on the chat box for me? Yes. Can you please write on the chat box for me these 5 fundamental principles that we have just discussed? Can you write on the chat box for me? Yes. Can you write on the chat box for me? What are 5 fundamental principles? What are 5 fundamental principles? Can you write on the chat box for me? Yes. Can you write on the chat box? What do you say? Can you write on the chat box? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. Okay. 5 threats to the fundamental principles. That is, these fundamental principles have certain threats also. Number 1 is self-interest threat. Number 2 is self-review threat. Number 3 is advocacy threat. Number 4 is familiarity threat. And number 5 is intimidation threat. First thing is, can you remember these points? And do you need to remember these points? Yes, you need to remember these points. You need to remember the 5 fundamental principles also word by word. You have to remember these 5 threats also word by word. We cannot do anything. But what I am going to do is, I am going to make you revise it so many times that you will remember it. So don't worry about it. Self-interest threat. That is, self-interest threat, when it happens, say I am Mr. A is the auditor. Mrs. B, who is the wife of Mr. A, is the shareholder of A Limited. Now tell me, do you think Mr. A will be able to objectively report? No. So that gives rise to the self-interest threat. Did you understand it? That gives rise to the self-interest threat. When can we say that there is a self-interest threat? When your personal interest and your professional obligations are not aligning or clashing somewhere. Understood this point? Self-interest threat. Understood this point? There are multiple scenarios that we will be covering where we can say that there is a self-interest threat. We will solve a lot of questions also. Okay. Now the second one, self-review threat. When I say self-review threat, what is the meaning of it? What is the meaning of self-review threat? When I say that there is a self-review threat, what is the meaning of it? As the word suggests, self-review means what? That we are reviewing our own work or somebody is reviewing their own work. So for example, if Mr. A prepares FS of A Limited and Mr. A audits FS of A Limited, will this work? No, because Mr. A would be reviewing their own work, would be reviewing their own preparation, and in that case Mr. A would not likely be able to find out any errors, find out any mistakes, or will be able to report objectively to the financial statements, right? So that is called as self-review threat when you are reviewing your own work. Then advocacy threat, when you are promoting the ideas of the client to the level that they come out as your own ideas. So promoting a client's position to the level that they become your own ideas, or that hampers with your objectivity and independence. Then familiarity threat. Say Mr. A is the auditor and Mrs. B, who is wife of Mr. A, is the MD of that particular A Limited. Now do you think Mr. A would be able to report objectively because his wife is the managing director or the CEO of the company? In this particular case, do you think Mr. A would be able to report objectively? No, right? The independence would be hampered, and that is why there is a familiarity threat when your close relationships are there in your audit client. Then intimidation threat. What is intimidation threat? When there is a pressure or threat, that is the management. Example, the management has threatened that they will change auditors. They will change auditors if we report, if auditor reports adversely. That is, management is threatening that if auditor reports adversely, they will change the auditor. Next time they will remove the auditor. Okay. Now there is pressure or threat. In this case, do you think the objective would be compromised? Yes, the objective would be compromised. So these are certain threats. What are these threats? Self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Okay. Will you be able to remember this? Yes. Do you need to do any other efforts? No. We will revise it so many times that you will be able to remember this. As of now, I have just explained it to you in a little basic manner. Okay. Then what could be certain possible safeguards? What could be certain possible safeguards over here? Possible safeguards. What is the meaning of this word? Safeguard. Safeguards can generally be defined as corrective actions. What could be certain corrective actions that could be taken over here? So segregation of duty, that is dividing the same process into multiple people, so there becomes a very less chance that all of these people will collide and will do the fraud or will give rise to any threats. Review procedure, there should be strong review procedure within your company. Rotation, you might change personals, change responsibilities of personals, change responsibilities of personals. Okay, here also I'll write divide the process in multiple people, that is, one person does not have the whole responsibility. Separate teams for separate works, that is, you can have one team in your company who will only, or in your firm, who will only look for internal audit. There could be one company who will only look for external audit. That could happen. And engagement quality review. Today only we have learned about engagement quality review. In what? In chapter number what? In chapter number 2 and 3 we have discussed about it. Okay, understood this part? But if you have to say only one chapter, then I will say that you should write chapter number 2 over here. Okay, understood this? Now the last part, what are the auditor's responsibilities? Although we'll have a good discussion about it on Mondays also, that what are the auditor's responsibility, how auditor needs to respond, what are the core responsibilities of auditor related to corporate governance, also related to auditor's responsibilities also. But they have to identify the threat. Whatever threats are there, it is the responsibility of the auditor to identify the threat. Then assess the threat. Not every threat needs to be resolved. So assess the threat as in potential. What is the potential of the threat? Will it affect the financial statements? If yes, what would be the impact? It is the material. Then apply safeguards. Safeguards as in what? The corrective actions. Safeguard as in what? The corrective actions. And one safeguard could be eliminate the threat. That is, for example, if your wife owns the shares, then maybe sell the shares. Example, sell the shares. Okay, or reduce the threat to an acceptable level. That is, even if you cannot sell the shares, you can bring it down to the required level. Okay, so for example, this could happen that you can stop promoting going forward. You can reduce the risk to the appropriate level. Okay, so this is very, very important. One example could be getting the work reviewed by an independent personnel. With this, we have covered certain basic pointers of chapter number 4 as well, which is professional ethics. So what are certain fundamental principles of professional ethics? Integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. What are certain threats? Self-interest threat, self-review threat, familiarity threat, advocacy threat, intimidation threat. What are certain possible safeguards? We have discussed it. What are certain auditor's responsibilities? We have discussed it. So with this, we have completed some portion of chapter number 4 also. Now on Monday, what we are going to do? Let me write it over here. On Monday, what we are going to do? We are going to complete chapter 3 and 4, and we are going to solve questions from chapter 2, 3 and 4. That is our objective for Monday. Okay, but before that, let me answer certain questions for all of you. Okay, if you want to connect with me on YouTube, then you can connect with my YouTube on ACCA with CA Supreet Agrawal. The link has been mentioned on the description box. You can go from there also. Then if you want to connect with me on Instagram, again the same username is there. Okay, if you want to connect with me on Telegram, you have to type my channel's name, which is ACCA with CA Supreet Agrawal. If you want to buy my AA or AAA courses, okay, AA or AAA courses, then you have to go to our website www.bbvirtualsglobal.com. If you need any more information, please feel free to connect with me on any of these platforms. Reach out to me, you can get the information, or I'll mention a number on the description box. You can call on that number also. Okay, so with this we have completed lecture number 3 of AA, and I would like to say that you have been a very great audience. Okay, so thank you so much for your continuous attendance, for your continuous responses throughout. I have seen that there have been certain people who have been continuously responsive, so thank you so much for that, and I would love to see you in the regular sessions also. Just in case if you have any doubts, any queries, please feel free to let me know, and please subscribe to this YouTube channel and this Instagram channel, because we are going to come up with a lot of reels covering tips, tricks, examiner report analysis, and a lot of other content that is going to help you to prepare for your December 25 or March 26 examinations. Now, one of the most favorite questions is this course be made possible, or will this course be useful for students who are going to appear for March 26 and not December 25? Yes, because whatever we have covered, it is fully updated, and if there would be any more questions for March 26, we will definitely be covering that also. You will get the full access, don't worry about it. Okay, so with this I would like to say thank you so much, because you have been a very kind audience, and I would really love to see you all in my sessions. Thank you so much.